aluminium and steel take shape. The Nifty ends around the 22,400 levels, while the sensex ends around 74,000 odd levels.
And Bharti Airtel slips after Starlink announces tie-up with Jio platforms and Airtel post-regulatory approval. Starlink is set to offer its broadband services via its distribution network in India. Analysts see little impact on existing services. Expect Starlink to be used by customers in low or no network areas.
The CEO of IndusInd Bank terms the accounting lapse as a one-off, says there are no hidden skeletons in the cupboard, pledges to turn a profit in Q4 after absorbing the estimated hit of 1,500 crore rupees. That's an exclusive. Hello and welcome to Markets Forward, your go-to show. We'll get you up to speed with regard to today's trading action and we'll set you up for tomorrow as well. I'm Nigel and joining me today is Rima. Well, Rima, pretty okay trading session at the end, right? Where you wake up to various global tremors, and if you end with a mild cut, I think the bulls will take that.
Indeed, we're closing once again closer to the 22,500 mark. Nifty and Sensex ending mildly lower, and a significant recovery from the day's low in the second half of the trading session. So in the face of, the kind of global news, headlines, and the weakness, not bad.
Well, that's right. It was a day of consolidation with a bit of a negative bias. That's the way I like to put it, because you go home with a cut of closer around 30 points or thereabouts. The problem was the markets have two pillars. One is the IT index and the other one is the Nifty Bank. In today's trading session, the problem was we had a lot of downgrades, a lot of question marks on the growth you're going to see from IT companies. Various brokerages had written about it. And because of that, tech was under pressure. The good news, though, was that the Nifty Bank, that's holding on to that 47,500 odd mark. Valuations are in favor for the Nifty Bank stocks. But, last couple of days it's been a little bit under the weather. Today, though, it was up close to around 200 points or thereabouts. The advance decline ratio, though, you had a high number of stocks that were declining than advancing, but there were various pockets of strength as well. So 1:2 is what we saw out there. And the mid-cap index as well did end in the red in today's trading session. The fund flow picture as well, not too bad. SIP numbers maintaining the pace. That was one fear. So that as well got digested by the street today.
Indeed. Let's also tell our viewers what we've lined up for you on our show today. We start with the top movers and shakers with Vivek. The stocks of the day were Bharti Airtel, Ramco and Dalmia Bharat. We'll give you the key reasons why these stocks were buzzing in trade, and we'll tell you the key market events to watch tomorrow. Last trading day of this week. But it's over now to Vivek. He's at the big wall for the top stock movers of the day.
Well, thank you so much for that. Again, a session, very volatile, very choppy trading session. But in the last hour, you did see quite a bit of buying emerging. Well, in terms of which were the key gainers today, it has to be IndusInd Bank right at the top, after the sharp knock that the stock took yesterday. Today, you saw very sharp recovery, especially after the stock actually saw a gap down opening. So very sharp intraday recovery. But remember, the stock was in the F&O band, so no fresh F&O positions were taken in the session today. The other stock on the radar was Tata Motors. Continued to see strength throughout the trading session. The company had an analyst meet where they went ahead and reiterated their Q4 FY25 guidance, and that particular stock managed to end with gains of over 3%. The other stock on the radar, one stock that was the highest gainer, or one of the top gainers as far as the NSE 500 index was concerned, was actually KC International, ended with gains of over 3.5%. And another stock, especially in the last hour, that saw some buying emerge was Akums Drugs. This particular stock, there was an initiating coverage note from Citi today, and they have a buy target on this particular stock, target price of close to 700. That stock too ended with significant gains today. But on the other hand, the entire IT pack, all the stocks on the back, something you highlighted at the start of the show, multiple downgrades coming in from many brokerages. The entire IT pack today saw significant selling pressure. L&T Tech down over 5% today. Ramco Cement, Dalmia Bharat, some of the southern cement companies, the Tamil Nadu-based cement companies to be precise, they were the ones on the back of worries of royalty as far as limestone mining is concerned. Ramco ended low by over 4%. PB Fintech, this particular stock sold off quite significantly today. The company went ahead and approved an investment of close to 700 crore in PB Healthcare for close to 34% stake, something that the street didn't like, over 4% lower today. And Zydus Life, again, there was a significant acquisition that the company had announced yesterday. Brokerages see this particular acquisition as EPS dilutive, at least in the first year. That stock too recovered a little bit of the day's low, but again ended with minor cuts today.
Okay, all right. Thanks a lot for that, Vivek. Well, let's welcome our guest on the show. We have Mayuresh Joshi, Head of Equity Research, William O'Neill, and Shrikant, Chouhan of Kotak Securities. Hi, gentlemen. Thanks a lot for joining in. Well, Shrikant, would it be too soon to say that this market has turned into a buy on dips market? Because at least as of now, the 22,250, that's holding out. And on a periodic basis, you're seeing either the Nifty Bank, Reliance Industries, or the Nifty IT index is batting for the bulls. What are the levels you're looking at, and how would you trade the Nifty?
Yeah. Good afternoon, Nigel and Riba. See, like, yes, for Nifty, it is like it has been consolidating since the last 5 days. And till the markets are not crossing 22,600 convincingly, I think we are going to see range-bound sort of activity. But yes, at the same time, in case if it breaks the levels of 22,300, then again, we could see the levels of 22,000 on the downside. So broadly, I am of the view that all these indices, like even Bank Nifty, if you see, there also we are seeing consolidation. It is not breaking the level of 47,800. It is not crossing the level of 48,500, 700. So there also we are seeing consolidation sort of activity. But yes, Nifty IT, that particularly has broken its important support levels, and we could see some more correction, close to 5-6% more from current levels. So broadly, I am of the view that till the Nifty, Bank Nifty is not taking the charge, we are going to see sideways sort of activity in this market.
Nifty IT index down 3% for the day, and from the start of the year, it's down 16.5%. But Bharti Airtel too slipped in trade. There was considerable excitement in the morning. It had a gap up opening after the company announced a partnership with Starlink. Starlink is owned by Elon Musk's SpaceX, and Starlink provides satellite communication. Soon after Bharti Airtel announced that they're tying up with Starlink, even Geo Platforms announced that they too will be tying up. So there is revenue potential, and it opens up an additional revenue stream because this will serve areas which hitherto were not connected. So for instance, in areas where the cables, the typical, telecom cables and wires don't reach. So your rural areas where the density is low and therefore it makes less commercial sense. But the way to read it from an analyst and stock market point of view is that it's not going to be a big game changer. It may not, be a big money spinner. One of the reasons is that Starlink is a premium offering. As one of the analysts pointed out, it's priced at $80 per month in the US. Even in a subsidized country like Kenya, that's in Africa, it's priced at $10 per month. In India, the ARPUs hover at about $200, $250. That's $3. For broadband, which is your home wireless, you pay a little bit more. You'll pay $5. But even then, it's cheaper in India. And India is a very price-sensitive market. Plus, we're not talking about the device cost, because in India, if you want Wi-Fi, companies, all the telcos provide that, the fittings free. So that's reason number one. Right? Can it become a mainstream, mode of communication? Unlikely. It's going to be used more by the governments or large enterprises and less so consumers. And secondly, in the immediate term, there is limited impact because one, Starlink hasn't got its licenses yet. Spectrum allocation is also still left. So at least in the near term, nothing really changes. Stock, as I said, opened up in the green but slipped 1.2% by close. Mayuresh on Bharti Airtel. Analysts on the whole are very bullish, and now they're watching out for the dividend prospects as the free cash flow in companies like Bharti Airtel improves because their capex is moderating, and the tariff hikes. But what about Starlink in particular and this particular partnership?
Absolutely, Rima. No, I think you have summed it up perfectly. I think on top of that, the rural market or the unserved market is extremely price sensitive in the Indian context. And therefore, even if you take the base prices that Starlink has offered in regions in Africa, specifically in Nigeria, I think that's the lowest that they've probably offered outside the US. So even if they go lower, I think to match the broadband rates that India has at this juncture might be a tad bit difficult because the equipment cost itself is significantly higher. And again, looking at technology, I think the expectation in terms of pulling it down below that $10 or $15 mark that they are offering in a few countries in Africa seems to be improbable. Having said that, the kind of pool that is unserved, around 300 million odd households that you probably got, fair estimate suggests that ARPUs for broadband services can anywhere be in the range of 470 to 525 odd rupees. And in a way, if they find a way out, both Starlink, Bharti / Geo, in terms of providing these services at a cost which does not hit them in terms of provision of these services, maybe I think the addition in terms of broadband subscribers might aid growth going forward. But nobody on the street is probably penciling that in at this juncture. And therefore, the core growth in terms of the wireless business with ARPU increases is the best case scenario for these telcos. As we see it at Markets with India, I think the ratings rankings look just fine as we speak. And therefore, anybody holding a stock like Bharti Airtel should continue.
Okay, all right. Thanks a lot for that, Mayuresh. Well, let's focus on the cement pack. Ramco Cement as well as Dalmia Bharat, both of them were under pressure after the Tamil Nadu government went ahead and imposed 160 rupees per ton royalty on the limestone that it's mined out there. Let's explain it in greater detail. Why is this important? Well, for both these two companies, they got harder hit because a large percentage of their clinker is in that state, that is in Tamil Nadu. So for Ramco, it's close to around 50%. For Dalmia Bharat, it's close to around 20 to around 25% or thereabouts. Just to give you a reference point, since you're talking about these numbers of 50% and 25% or thereabouts, the EBITDA per ton that you're expecting for the coming year for both these two companies is between 800 to around 900 rupees on a per ton basis. So you give it that they're going to be hit by around 160 rupees per ton. That's on the whole. But only 50% of Ramco's clinker will be coming out of there. So for Ramco, the effective hit could be around 80 rupees. While for Dalmia, 25%. So 25% of 160 rupees, which will be effectively 40 rupees. So you're looking at a 4 to 10% hit on the EBITDA number in the coming year if it's not passed through. So the street is hoping that some part of this hit will be passed through. The other problem is the other states may say, hey, they are putting in a limestone royalty of close to around 160 rupees. We could do the same, which will be a bit of a threat. Mayuresh, what are you making of these names? If you want to look at it as a blessing in disguise, now they have a reason. Go ahead and we have to increase it by 10 to around 12 rupees per bag to pass this through. And then, in fact, that's what could kick off the price increase cycle, which has been missing for many, many months. Your take?
Well, absolutely. I think that can be the base case scenario, Nigel, that can get worked out, because I think the companies are not completely going to absorb this if this does come through. And therefore, I think it's going to be a partial or a full pass-through that probably happens in terms of these royalty hikes that take place in terms of the end product prices as well. And that probably gives a base case scenario for the entire industry as well. Obviously, prices have not got increased. There were large expectations that prices per bag across India, across different regions, should so increase once the monsoons are over, but that's really not happened. You've seen some element of input cost stability, but there have been sporadic increases in input costs as well. And therefore, I think this might actually be an excuse for the industry to probably hike prices if these firms probably do it. And obviously, these firms are not going to take a hit. So in my opinion as well, I think the pass-through will happen, and probably the whole industry might have some element of pass-through coming through. Not good from an inflationary point of view, but I think it was a much-needed hike that the industry probably needed.
Got that. Let's talk about technology names, because tech led the fall today with a cut of close to about nearly 3%. Now, the reason is some downgrades coming through. So first, Morgan Stanley downgraded Infosys to an equal weight, target price at 1740. Then Motilal Oswal also downgraded Infosys to a neutral, target price 1650. And across the board, both these two brokerages lowered the target price and growth estimates. Morgan Stanley also downgraded Wipro to a sell and LTTS to a neutral. And both Morgan Stanley and Motilal Oswal prefer TCS to an Infosys. Morgan Stanley says their key trade is TCS over Infi, TechM over HCL Tech, Coforge over Emphasis. Now, the key concern is growth. Growth was expected to rebound in FY26 after being tepid in FY25 because discretionary spend was held back for the last 2 years as high inflation in the US was hurting tech budgets. So the hope was that after 2 years of, slowdown, discretionary, spending purse strings would open up. Fed rate cuts would happen, inflation wouldn't hurt, and the companies would have more to spend. But now, given the uncertainty that we're seeing in the global environment, clients perhaps are back to a wait-and-watch approach and monitoring things. So decision-making has delayed, and this is going to affect growth in FY26 and FY27. And on your screen, you can see Morgan Stanley's numbers. For FY26, they are expecting a recovery compared to FY25, but growth would be, 3-5%? At best, it's HCL Tech at 5.3%. And for FY27 as well, growth rates have been lowered compared to their earlier estimates. And now we're talking about a 5 to 7% kind of a growth. So the hope was, Nigel, high single digits, double digits, getting to 10-12%. But that's, not playing out because of this uncertainty.
Yeah, brokerages are questioning that, right? Well, let's get to the other big cue that we got today. The February mutual fund equity flows, they fell by close to around 26% on a month-to-month basis to around 29,241 crore rupees. Falling markets coupled with the lack of big bang NFOs and higher redemptions are believed to have led the slowdown. While large cap category was more or less steady, the mid and the small cap funds saw a month-on-month decline of close to around 30 to around 34% inflows, a first in several months. The silver lining, however, were the SIP flows, which remained fairly steady amidst the market correction at around the 26,000 crores odd mark, virtually unchanged from January 2025. And also on a year-on-year basis, it was much higher than the sub 20,000 crore figure that we were working with same time last year. Well, let's quickly get in Shrikant. Shrikant, we discussed a few stocks. Your view on the tech pack, is there some kind of support coming in there? Any stock you would like to give us a recommendation on? And also, since we discussed cement, is there any kind of support for Dalmia Ramco, which got hit hard today?
Yeah, Nigel, I think, because of this particular news flow, we have seen these stocks breaking their important support levels, specifically Infosys, which was which has been consolidating within the range of 2,000 and 1,700 for almost 8 months. Now it has broken that support. And now we may even see the levels of 1,400. That's the view on Infosys. So we could see some 7 to 8% sort of correction in the near term for Infosys as well as for TCS. There also I am expecting stock to fall to the levels of 3,000, 3,050 based on technical formation. For Dalmia Bharat and Ramco Cement, there also if you see, they have also broken their important supports, and there also we could see the correction of minimum 8 to 10%. So all these stocks have they were consolidating, but now maybe because of the news flow which was there, and maybe the companies, they were maybe expecting such type of news flow, and that is why the overall bearishness was there, and now they have broken their support levels. So broadly, I am of the view that yes, some more pain is near term for all these stocks.
Got that. Mayuresh, come in on technology names, a quick word. And are you a bit concerned? And is there more derating or EPS cuts ahead?
Also, I think a large part of the price damage, Rima, is probably in the price. So to a large extent, the markets are now penciling in that there might be some element of earnings hit that these stocks might take. Now, it really depends in terms of Q4 commentaries on how management are probably perceiving the entire environment that is probably expected to play out, both in terms of North America as well as the European markets. And therefore, I think the Q4 numbers as well as the Q4 commentary is going to be extremely critical for all these stocks under consideration. Any commentary which is a little bit detrimental in terms of order flows, in terms of pricing, in terms of how margins might play out, might actually then pull down earnings and probably derate the sector a tad bit more. But till this point of time, my take is that a large part of the price damage has probably happened. Q4 numbers and commentary is going to be extremely critical for the whole sector.
Okay, gentlemen, thank you very much for joining in. Get into a short break. We'll come back with the corporate voices and the key market events to watch on the other side.
Welcome back. You're tuned in to Markets Forward. Well, as promised, let's get you the key market voices that we received during the course of the day. First up, We have IndusInd Bank. The stock gained after the management reacted to the accounting gap disclosure. The management says that this is a one-off and the problem was related to forex currency liabilities, and that the anomaly was discovered in October and started assessment since. The management said that the bank could see some decline in NIs and that the bank will not need capital for the next 4 quarters. Also, the bank will see great profitability from the first quarter, and it guides to get back to 4% margins.
Next up on our radar is Uno Minda. The company does not expect any impact from Trump's tariff, adds that domestic auto volumes remain healthy. They're optimistic about the auto volumes for the next 2 to 3 years. The management also believes they will continue to outperform the industry, and for FY26, they're guiding for margins around 11%.
Well, before we wrap up, let's get you all the key market events you need to watch out for. Vinny is standing by to run us through that list. Vinny, take it away.
So in terms of global events that you should keep an eye out on tomorrow, in the United States, let's keep an eye out on the PPI data as well as the weekly initial jobless claims data. That is going to be important in the US market. In the Eurozone, we are watching out for the industrial production data. So that is going to be key to watch out for there. And coming to the domestic front now, obviously Nifty weekly expiry is what we're keeping an eye out on. So that is important in terms of the volatility that we may see tomorrow in the markets. Corporate actions to watch out for on the domestic front. Gensol Engineering, the board will be meeting to consider stock split or fundraising plans that they have. So keep an eye out on that. Kolte Patil also to consider fundraising plan. And in other news flows that we'll keep an eye out on, the Commerce Minister Piyush Goyal will be meeting Export Promotion Council. That is going to be tomorrow. Now, obviously, this is important this time. Why? Because the Trump tariffs and all those issues around that. It is said that maybe they will pick up that topic and maybe some announcement would come in on that front. So that will be key to watch out for.
Thank you very much for that. And before we wrap, we leave you with some key market commentary from Citi's top team. Listen into that, and thank you for watching the show.
We have used a very operative phrase that at least 50 basis point of rate cuts. Our Citi House view on Fed rate cut is 5 rate cuts this year. So we have taken that into consideration as well. However, I must say that at this moment, the RBI, the way they're positioning itself on the growth and inflation dynamics, it looks like there is scope for rate cuts in India, regardless of what happens in US. India's capital flows are less interest rate sensitive than growth sensitive. So if we can get our GDP growth numbers up, we'll start seeing the capital flows come back, and that will stabilize the BOP, that will stabilize the currency. We need not worry as much on the rate differential with US at this point of time, given where our macros are.
I think as long as investors see the secular growth in India that they come for, I don't think those will play a big role, at least from a medium-term perspective. Right? If you think about like Indian markets, any major index in the last 15 years or so, there has been like low double digit, 11, 12, 13%, depending on which index you look at, that kind of earnings compounding. And that I think remains very important. But the most important variable that I'm watching out for is earnings growth visibility. As that improves, I think that is what really gets people back into India. So see, what we are expecting, what our team is expecting is a low to mid-teens kind of a growth next year.
Aluminum and steel take shape. The Nifty ends around the 22,400 levels, while the sensex ends around 74,000 odd levels.
And Bharti Airtel slips after Starlink announces tie-up with Jio platforms and Airtel post-regulatory approval. Starlink is set to offer its broadband services via its distribution network in India. Analysts see little impact on existing services. Expect Starlink to be used by customers in low or no network areas.
The CEO of IndusInd Bank terms the accounting lapse as a one-off, says there are no hidden skeletons in the cupboard, pledges to turn a profit